Hi, this is Charles Didastic. I'm the Managing Director of the Blue Bond Group. And today's video is probably the most important video that I've ever done on our video channel over the last 10 years. It's trying to alert you to a potential change in inheritance tax, which could have a significant impact on how we are able to help clients deal with their wealth. So we have a very unusual firm and we've been helping people for more than 20 years. And 19 out of 20 of our clients pay zero inheritance tax because we have in-house lawyers, accountants, tax advisors, financial planners. Everything comes together in order to produce a comprehensive plan. So nearly all of our clients pay zero inheritance tax. But this big rule change could make it much more difficult for us and nearly every other firm to help you to avoid inheritance tax. Okay, so welcome back. So as I explained, this is one of the most important videos I've ever made in years. And basically it explains what I believe will be future changes to inheritance tax. Now, obviously, I don't have a crystal ball. I don't have an insight into the government, but we do know what the problems are and how those problems could be fixed. And if this one thing comes into place, it could have a major impact upon your wealth and your ability to pass your assets on to your kids free of inheritance tax. So, what should you do? Why should you do it? And why there is a limited window to act? So, what's the core problem? So what happened is during COVID, the government borrowed a huge amount of money in order to support the country and everything that was going on. So we all know this. So the UK debt is now at the highest level it's ever been for over 30 years. So the government tried to act by putting in some measures in the 25 budget in November 2025. But this saw almost no reaction with regards to the interest rates that we're paying against our borrowing. So the interest rates have made this borrowing unsustainable. The government has absolutely no choice but to raise more taxes. So where will the money come from? Now, politically, it's quite difficult for the government to just tax everybody. That would be the easiest solution, right? Just increase income tax, and that would pretty much solve the issues. However, they've made a pledge not to do so. So if they've got any hope at all of getting in again in the next election, then changing income tax is not an issue. Because people only look at the results and don't look at the reasons. So the more likely targets are likely to be businesses and business owners, wealthier individuals, and landlords. These are the clients that we help in terms of their inheritance tax. So currently, under the current rules, everybody has a 325,000 nil-rate band allowance. Now, you have an additional allowance of 175,000 if you're a homeowner, but let's ignore that for the moment. Just focus on the 325. Now, these allowances are likely to remain frozen, I believe, for the foreseeable future. If they ever go up again, I'll be surprised. Okay, so the current gifting rules say that you can gift an unlimited amount. You could, if you had the money, you could gift away 10 million, right? And that is a potentially exempt transfer. And after 7 years, the whole gift falls outside of your estate. You can gift an unlimited amount into a trust as well, but if you gift over 325,000, you pay an immediate tax charge of 20%. So in 20 years of doing this, no one's ever done it, frankly. So what's the issue that I see coming up? If the government in one simple rule change says, right, that 325 allowance is not an allowance that reinstates itself every 7 years, it's now a lifetime gifting allowance. So that applies to both direct gifts, which are potentially exempt transfers, and gifts into trusts, which are chargeable lifetime transfers. So both are impacted by this and saying you can't put more than 325 and you can't put in more than 325 in your entire life. So what does that mean? Is if you give 300,000 into your trust or to your children now directly, when you die, you've only got an allowance of 25,000 left, and anything else will be subject to 40%. Okay, now, if you gift away more than that during your lifetime, then they will tax you possibly at the 40% straight away, right? The government needs immediate revenue, so this makes sort of sense to me. So it not only affects that, affects other mechanisms as well. So there is currently a rule which says gifts out of normal income. You're earning a good amount of money, you're drawing down on your pension, and those of you who are up to speed with this understand that pension funds that you leave on death are now added to your estate for potentially inheritance tax. So people are drawing down on their pension funds and now making gifts out of normal income for money they don't need. Well, the moment that goes over 325, alongside any direct gifts, you're now into the 40% tax regime. You see how it affects everything in one go. So, effectively, this one rule change affects multiple strategies. And why is that a major problem? It makes the planning significantly more difficult. So I said earlier that very few of our clients end up paying inheritance tax. Right? 19 out of 20 pay zero. So this makes the planning significantly harder for us and every other firm. And most firms don't have our facilities of the legal advice, the tax advice, the financial planning all in one place, right? So it limits your ability to reduce the inheritance tax. Now, why have you got a limited timeline? Because the next budget is due in October 2026. So that's 6 months from the date of me shooting this video. I think this may well be your window of opportunity to deal with it. And if you don't deal with it, and it's not done by then, done and finished. So you've got to have done your planning, you've got worked out what you're going to do, you're going to have to work out how you're going to do it, taking all aspects into account, how much you're going to give away directly, how much you're going to give into trust, what are you going to do with your pensions, how are you going to draw it down. Everything has to come into a plan. It's going to take a while to put the plan together, and then you've got to implement that plan. Once it's done, I think you're safe, because they won't retrospectively say, okay, you've already made a gift and now it applies to the lifetime allowance. They might. I don't know. They may say, well, okay, look, any gifts made within the last 7 years fall into this net regime, in which case we're all stuffed, right? But that's not the likely scenario. I think the likely scenario is they'll say, from now on, any gifts that you make fall into this regime. That's the most likely scenario. So you've got 6 months in which to deal with it. And that's it. That's why this is so important, because for many of our clients who are worth several million and above, this is a major part of the planning. Being able to gift money away into trust repeatedly, gift money into family investment companies, gift money directly to your children. All of those are issues. So planning takes time, it takes coordination. So act now. Start now. You delay, it's going to cost your family money. It's pretty much as simple as that, right? Now, do I know this is going to come into place? No, I absolutely don't know that. But it's my biggest fear, because it's the one thing that changes everything. And it's such a simple thing to change. A repeatable allowance, which comes back into place every 7 years, is actually more complicated than saying, right, you've got a lifetime allowance. Now, people also say to me, well, okay, how will they know? Well, they know because your children, if they're the executors of your planning, have to declare it. If they don't declare it and they benefit from the result of not having declared it, that is tax fraud, which is a jailable offence. That's how the government know. And you're not going to put your children in that position, right? So take action now, think about what you're going to do. We're very, very well placed to help clients solve this issue. So go ahead, get it done, take action. That's why this is such an important video. You've got to do it. You've got a 6-month window. That's it. Okay, hopefully that helps. Thanks for listening. Bye for now.